Hi, welcome to Business A-Level. My name's Richard. I've been teaching and examining business for the best part of 40 years, and I've been the head of department in a number of schools. This is the first of 11 videos taking you through the A-Level business course. It is primarily designed for use in an educational setting, solving issues with staff absence as a standalone self-study course or a revision program. However, it is also highly suitable for those who are starting or running their own enterprise, employees seeking advancement into management, or for anyone who just wants to learn more about business. For the purpose of structure, I've used the AQA specification as it is the most widely used. However, it is also suitable for Pearson and OCR exam boards, where the differences are mainly in the structure of the specification rather than in the business content. Each video covers one unit of the syllabus. Unit 1, what is business? 2, managers, leadership and decision making. 3, decision making to improve marketing performance. 4, decision making to improve operational performance. 5, decision making to improve financial performance. 6, decision making to improve human resource performance. So they are the AS units, and then from 7 to 10 we have analysing the strategic position of a business, choosing strategic direction, strategic methods, how to pursue strategies, and then finally number 10, managing strategic change. Every video comprises a series of questions and answers, as would occur in a normal classroom situation. Look and listen to the questions, then take notes from the detailed explanation that follows on the next slide. If you need more time to take notes using the student note sheets provided, then simply pause the video. At the end of each unit, there is a multiple choice assessment to test your progress. The course also includes PowerPoint presentations without commentary for teacher-led sessions. You can access the other 9 units by visiting the Times Educational Supplement shop at the address below, or search tes.com shop the businessman. Click on the first link that appears and that will take you to the economics and business supermarket. So let's take a look at the first unit. What is business? QA advanced level business, questions and answers. 3.1, what is business? Give 4 reasons why someone would want to start a business. Firstly, to be their own boss. You don't have to answer to anybody. Most people during their working lives will always have a boss, but if you work for yourself, you don't. Flexible working hours. You can choose which hours you work, although to be fair, most self-employed people work much longer hours than those that to work for somebody else. 3, you get to keep all the profit, thereby substantially increasing your income. And then another reason might be to build a legacy for your children. In other words, just leave the business to your son or daughter. What is the difference between profit maximisation and profit satisficing? Well, profit maximisation is about trying to squeeze as much profit out of the business as humanly possible, whereas profit satisficing is where a business merely attempts to generate enough profit to keep its stakeholders happy. An example of this might be comparing 2 corner shops. One is open from 5 o'clock in the morning till 12 o'clock at night, 7 days a week, clearly trying to make as much profit as possible, whereas another corner shop, the owner might decide that he's only going to open from 7 till 5 and have Sundays off because he's producing enough to keep his stakeholders happy. What other objectives apart from profit might a business have? Well, firstly, the biggest one is survival. That's just staying in business. This has been particularly the case during the pandemic. Growth. That simply means getting bigger in terms of revenues or profits or market share. Cash flow. ensuring receipts and payments are coordinated such that bills can be paid on time, a very important objective for all businesses. Social, this is where charities raise money for good causes, for example, cancer research. And then ethical reasons, this is about behaving responsibly and being a good corporate citizen. What is a mission statement? It's a concise explanation to all stakeholders of the direction the business wants to take and the broad aims the business wants to meet. Google's mission statement, for instance, is to organise the world's information and make it universally accessible and useful. I think you might agree that they have been successful in that mission. Outline the hierarchy of aims and objectives for a private sector business. Well, first of all, at the top of the tree, we have a mission statement. So that's the broad aims the company wants to go in. Then the corporate objectives are the individual steps that the company would need to meet in order to fulfill their mission. These are broken down into functional objectives. That is what each of the departments, marketing, human resources, etc., need to do in order to meet their objectives. Then employee objectives is where the employees themselves are given targets to meet. What is a SMART objective? Well, it's an objective that has the following characteristics. It needs to be specific. That means absolutely clear and unambiguous. It also needs to be measurable. You've got to be able to put numbers on it. It needs to be assignable, which means you need to identify the people who are responsible for its achievement. It needs to be realistic. That simply means that there is basically no point in setting targets that can't be met. And then time bound means that there should be a date by which the objective is actually achieved. Incidentally, the A in SMART is often changed to either agreed or achievable, but the one we're looking at there, assignable, is the original one from Duran 1981. Why might short-term and long-term objectives conflict with one another? Well, a short-term objective could be to maximise profits by cutting costs. However, this could clash with the long-term objectives of improving quality and growth. So, in fact, there's a trade-off. A bonus culture often influences decisions in favour of the short term, as directors' pay is often related to short-term profitability of the company. What is the formula for profit? Well, profit is calculated by subtracting your total cost from your total revenue. Now, the total revenue is calculated by multiplying price by the quantity sold. Total costs are variable cost times quantity plus fixed costs. There is also an alternative method that you can use to calculate profit, and it's called the contribution method. And what we do is, first of all, you take the selling price and subtract from it the variable cost per unit. You then multiply that by the quantity sold, and then finally take away your fixed costs. This method is particularly useful if you're doing calculations in your head. Differentiate between variable costs, fixed costs, and total costs. Well, a variable cost is a cost that changes with output. For example, the cost of raw materials. The more you make, the more it costs. Fixed costs, these are costs that do not change with output. For example, rent of the factory. This does not change relative to the amount produced. Total cost is simply the two added together, fixed cost plus variable cost. Explain the difference between limited and unlimited liability. Unlimited liability means that if a sole trader business fails and goes into bankruptcy, then all of the owner's belongings may be sold off to meet debts. This principle also applies to ordinary partnerships, but not to limited liability partnerships. Limited liability applies to private limited companies, LTDs, and public limited companies, PLCs. In the event of these companies failing and going into liquidation, only the business's assets may be sold off. The owners or shareholders' personal belongings are protected. What is a sole trader? It's a business owned by one person who has unlimited liability. So there's nothing to stop sole traders employing other people. The important part is that it's owned by one person. 3 advantages and 3 disadvantages of sole traders. Well, firstly, all profits go to the owner. It's very easy to set up. You only have to inform Her Majesty's Customs and Revenue for tax and national insurance purposes, and the owners make all the decisions. The disadvantage, however, is unlimited liability. The business ends on the death of the owner, and it does not have the prestige of a limited company. Define a partnership. This is where 2 or more people undertake activities with a view to making a profit. What is a deed of partnership? It's a legal document that sets out the conditions of a partnership, for example, how profit will be split and how much capital will be introduced into the business and by whom. So clearly, this is a really good idea to have this drawn up at the start of a partnership because it will avoid many arguments later on. What does the term joint and several liability mean? It's where actions of one partner in a partnership affect the other partners. So if one partner makes a very poor business decision, that would be applicable to all the partners, not just the individual who made it. How many partners can you have in a partnership? 20, but some legal firms have more. Differentiate between a private and a public limited company. Both are owned by their shareholders, but there are some important differences. Firstly, anyone can buy shares in a PLC, and the price of those shares will be quoted on the stock exchange. PLCs must publish detailed annual financial information. They also tend to be much larger than limited companies. In a private limited company, the directors have to invite potential shareholders, i.e. there are no advertising of shares is allowed. The directors also decide how many shares you can buy and how much they will cost. Most companies will start off as limited companies and then grow as they convert to a PLC. What is meant by the divorce of ownership and control? With sole traders, partnerships and most limited companies, the owners work in and manage the business. In PLCs, directors are appointed to run the company on behalf of the shareholders, thus ownership is separated from control. Sometimes the directors and the shareholders have different objectives. For example, dividend payouts versus reinvestment of profits. What is an AGM? This is the annual general meeting of shareholders. This allows them to discuss and question the performance of the business and to vote on proposed changes. What does the term flotation mean? This is the name for the transition of an LTD to a PLC through a share offering to financial institutions and the general public. The shareholders of the limited company are in effect selling off part or all of the business. This process is normally handled by an investment bank, which guarantees to buy any unsold shares. Why would somebody want to buy shares in a company? Well, shareholders normally receive an annual dividend. That's a payment on each share that they own. That's the first reason. And secondly, if the business is successful and generates large profits, it may then be able to increase dividends. As a result, the demand for its shares will be greater, which in turn causes a share price increase. The shares, may then be sold at a later date for more than they were purchased. This is termed a capital gain. What will cause the share price of a PLC to fluctuate? Well, the price of shares will depend on the demand for them. This will be influenced by increased profitability, which normally leads to increased dividend payments. General movements in the prices in the stock market are where the prices of all shares go up or down, and this is generally caused by global events. One measure of this phenomenon is the FTSE 100, which is an index of the share prices of the top 100 British companies. What are the four main sectors by ownership in the economy? Well, we have the private sector, and that's all businesses that are owned by individuals and shareholders. So that would be sole traders, limited companies, partnerships and PLCs. In the public sector, we have organisations owned by different parts of the state, for example, central government, local government and nationalised industries. We have not-for-profit and charitable organisations where the owners don't withdraw profit, but instead reinvest it for the benefit of the community. Finally, we have mutuals. These are owned by their members, which may be either consumers or employees. From a consumer perspective, we have examples of the co-op, the retail co-op, or Royal London Insurance. Some mutuals are owned by their employees that actually work in the business. A good example of that is the John Lewis Partnership. How might industries be classified? Well, initially we have the primary industry. That deals with the extractive industries. These are industries that basically get stuff from our earth. So that will be mining, farming or fishing. Secondary is about manufacturing. So that could be making cornflakes to cars. Tertiary sector is about service industries, which is dentistry, hairdressing and accountancy. Quaternary is about information and communications technologies and specialised knowledge such as consultancy and software design. Now, what is meant by the external environment? The external environment refers to the surroundings in which the business operates in terms of political, economic, social, technological and environmental and legal influences. This is often abbreviated to the acronym PESTEL, and we will meet a lot more of this later on in the course. Now, what is meant by competition in the marketplace? Well, competition refers to other businesses that are selling in the same market. Why does consumer income matter? Well, the amount of income that consumers have directly determines how much they can spend on products. Changes in consumers' income will impact on the number of sales that a business can make. What are interest rates? Interest rates are the cost of borrowing, but also the reward for saving. Commercial banks are intermediaries that take in savings and pay interest on the amount deposited. They then lend that money at a higher interest rate to borrowers and so make a profit. The base rate of interest is set by the Monetary Policy Committee at the Bank of England, and it reviews this base rate of interest every month, raising or lowering in order to meet various economic objectives. What are demographic factors? Well, demographics refers to people and in particular how they might differ through age, gender, income, religion and ethnicity. These factors will influence the type of products that consumers will buy and how much they are prepared to pay for them. What are environmental factors? This is when businesses pursue environmental objectives such as reducing waste, for example, less plastics and landfill, reducing pollution in terms of air, noise and water, reducing their carbon footprint, for example, carbon dioxide emissions, and then pressurising their suppliers to be equally as green. Companies will often try to be seen as green so as to develop a USP, which is a unique selling point. So they attract business from like-minded consumers. What is meant by fair trade? Fair trade is a global movement with strong and active presence in the UK. It's represented by the Fair Trade Foundation. The idea is that UK firms source fairly priced, quality materials from ethical businesses located in developing countries. Fair trade means guaranteeing workers' rights, safer working conditions and fairer pay. For shoppers, it means high quality and ethically produced products. By joining this movement, UK companies may also attract business from like-minded consumers and so gain a competitive advantage. That brings us to an end for the question and answer session on 3.1. We're now going to do a 20-question multiple choice exercise. If you have this sheet in front of you, then that's great. If not, just jot down numbers 1 to 20 and write the appropriate answer next to them as we go through it. Question 1. In which industrial sector would you place a deep sea fisherman? A, primary. B, secondary. C, tertiary. D, quaternary. Question 2. In which sector would you place a weather designer? A, primary. B, secondary. C, tertiary. Or D, quaternary. Question 3. Unlimited liability means A, owners are responsible for all debts of the business. B, partners are responsible only for their own debts. C, profits are completely unrestricted. D, owners are responsible for the repayment of bank loans. Question 4. Which forms of legal structure have unlimited liability? A, sole traders. B, companies limited by guarantee. C, private limited companies. D, public limited companies. Question 5. What does PLC stand for? A, public limited company. B, private limited company. C, privately licensed company. Or D, product life cycle. Question 6. What is a flotation? A, the launch of a new ferry by P&O. B, the offer for sale of new shares in a PLC. C, where a company is financially buoyant. Or D, the opposite to sunk costs. Question 7. Which statement about limited and PLC companies is untrue? A, both have shareholders. B, both need to publish the same amount of financial information. C, both have limited liability. Or D, both can own property. Question 8. Which of these is not a reason for buying shares in a PLC? A, to gain dividends. B, to be able to vote at the AGM. C, to get discounts on products. Or D, to gain an appreciation in the share price. Question 9. Profit may be defined as A, fixed cost minus variable cost. B, total revenue plus total costs. C, total revenue minus fixed costs. Or D, total revenue minus total costs. Question 10. Fixed costs. A, change as output increases. B, fall as output increases. C, remain constant as output rises or falls. Or D, are always paid off first. Question 11. Variable costs. Change as output increases but remain constant if output falls. B, vary directly with output. C, remain constant initially, then fall. Or D, only change in the long run. Question 12. What is the profit if a company sells 125 units at £5 each and has total costs of £500? Is it A, 500, B, 1,125, C, 625, or D, £125? Question 13. What does the letter R stand for in the acronym SMART? Is it A, random, B, realistic, C, reliable, or D, rewardable? Question 14. Which of the following is most likely to be included in a mission statement? A, the purpose of the organisation, B, last year's profits, C, the chairman's report, or D, last year's sales revenue? Question 15. What is meant by the term private sector? A, organisations owned by the government, B, organisations owned by individuals and shareholders, C, nationalised industries, or D, charities? Question 16. Which of these types of business does not have limited liability? A, a PLC, B, a sole trader, C, a limited company, D, a limited liability partnership? Question 17. The formula for calculating sales revenue is A, price minus total costs, B, price times total costs, C, price times quantity sold, or D, quantity sold plus price? Question 18. Which of these is not a fixed cost? A, cost of stock, B, rent, C, staff salaries, or D, heating and lighting bills? Question 19. Which of the following statements is true? A, the shares of private limited companies are quoted on the stock exchange. B, sole traders can sell shares in their businesses. C, PLCs have to publish detailed accounts. Or D, ordinary partnerships have limited liability? Question 20. The acronym SMART means A, specific, measurable, accurate, realistic and tough. B, specialised, memorable, accessible, realistic and timed. C, specific, measurable, agreed, realistic and timely. Or specific, monetised, accurate, ranked and tested? Okay, so that brings us to the end of the multiple choice section. So let us now just run through the solutions. So 1 is A, 2 is D, 3 is A, 4 is A, 5 is A, 6 is B, 7 is B, 8 is C, 9 is D, 10 is C, 11 is B, 12 is D, 13 is B, 14 is A, 15 is B, 16 is B, 17 is C, 18 is A, 19 is C, and 20 is C. Okay, that brings us to an end completely of 3.1, and I shall see you when we look at Unit 3.2, which is about leadership and decision making. So see you then.